Good afternoon, hello and welcome back to Moneycontrol's live stream. You're watching Closing Bell with me, Lovisha, Darad, and joining my colleague Yatin Moto. Well, Yatin, the significant slide that we were expecting for benchmarks, it's still relatively better today in the late recovery we have seen, given the double tariffs that the markets have been grappling with. But yes, Nifty at 3-month low, below that 24,600 mark itself. Sensex also flat in the green, but recovered about 700 points from the day's low itself. Given Pharma and IT is not subject to these double tariffs that US President Donald Trump has levied, those two sectors did relatively well and outperformed the benchmark indices. However, we did see the heat coming in for the shrimp, gem, and of course the textile stocks that felt the heat of these double tariffs. Now, the first 25% tariffs will be going into effect today, but the rest penalty, that is 25%, will be in another 21 days. So we have that 21 windows going ahead as well. But Yatin, while we are expecting a climb down from here on from those 50% tariffs itself, given that Kremlin has confirmed that Trump and Putin's meeting is on the table, we are now hoping that that additional 25% penalty could be taken off.
Absolutely, there is always a hope at the end of the tunnel, and we would see some light. President Trump is not clearly talking as to what he intends to do as to the trade deal with India. Obviously, there is a 21-day grace period in which this tariff will become effective, which is the double tariff, 25% plus 25%. I think geopolitics is dynamic when it comes to the US-Russia relations or the US-India relations or India-Russia relations. So, a lot of things will happen and unfold over the next 2-3 weeks. Today, market saw some hope that there could be some respite for India. And more importantly, today was a expiry week day, it's Thursday. So that had to play some role with respect to short covering as well. However, talking about the small and mid cap indices, they recovered smartly in intraday trade. Morning, the advance decline ratio was almost 1:5, which improved to almost 1:1 by the end of the day. So yes, markets recovered well across the board, the mid cap, large caps, small caps, everything. But yes, clearly we will watch out for the outcome of Trump-Putin meeting. More importantly, Putin is also expected to visit India this month, and Prime Minister Modi will travel to China and then probably to Japan for the SEO summit as well as bilateral meetings. So, a lot of things on the geopolitical front over the next 2 to 3 weeks.
A whole host of events that is panned out for. But yes, coming there to the late recovery in the markets that the markets have seen, let's take a look at some of the top Nifty gainers and losers. Hero MotoCorp on the back of the strong Q1 results did well today, 4% uptick coming in for the counter. Some of the tech stocks did well today, like I was talking about the Nifty IT index. Tech Mahindra, Wipro seeing a gain of about 1% itself. JSW Steel and Eternal are some of the other gainers on the Nifty 50 itself. But if you look at the flip side picture, Adani Ports and Adani Enterprises, both the Adani Group stocks did not do well, and they are commanding the top losers on the Nifty 50, seeing a cut of about 1 to 2% each. Trent also did not really impress brokerages with its Q1 performance, and that's why we saw a cut of about 1% on the counter itself. We'll discuss the stock later in detail. Tata Motors and Grasim also seeing a cut of about nearly 1% itself in today's trading session. But yes, a broader end of the markets that stole the spotlight today, because if you look at the mid caps, they outperformed the markets with about 0.3% gains, and small caps with about 0.1% gain itself. Yatin, what are you gathering from this end of the markets? Good moves.
So, if you look at the mid cap and small cap gainers, we had stocks like ITI, Kaplan Point, FSL, Kirloskar Brothers moving 5 to 10% in trade. However, we had some profit taking in Godfrey Phillips. That stock fell 8% after moving nearly 30% in the short term. We also had stocks like BHEL, GNFC, R Power witnessing some profit taking at higher levels. In fact, we'll talk about BHEL results in detail. Eternal, that stock saw a big block deal of nearly 4,000 crores. And we know that probably Alibaba has sold their stake via Antfin. And after that block deal, the stock saw a smart recovery intraday, closing above that 300 mark. Also, we had stocks like Fortis post the numbers, hit fresh 52-week highs. Delivery, TVS Motors and JSW Cement Steel are other stocks which moved in trade today.
That's right. Now let's take a quick look at the top stocks that what was the talking point of the Dalal Street today. We'll talk about Bajaj Auto first. Eventually settled, positively in trade today, but the company posted a relatively good performance. Both top line and bottom line saw low single-digit growth. But in the June quarter, but fairly the stock was relatively muted, and the muted trading session was largely attributed to the company's reduction in electric two-wheeler production for August and September, and it even cut the electric three-wheelers production by up to 75% for both of these months itself. Now, the company did mention that there is restricted availability of the high rare earth magnets from China, so they have been shifting to low rare earth magnets in its place. The company also is working on the HRE-free magnet motors to become more self-reliant. Now, we did see that the Rajiv Bajaj, in a conversation with CNBC TV 18, did say that Chetak's EV sales had some impact in the March quarter due to higher volumes, but the June quarter did not see much of a higher hit because of the higher inventory. Now, for the August month, they're seeing zero production, but they said that they will be able to normalize the production by October itself. Now, brokerages have largely remained bullish on the counter, but they have trimmed their target prices due to these ongoing issues of the rare earth magnets. CLSA, for instance, they gave out an outperform call, but they cut the target price to about 99.71 rupees per share. On the other hand, Bernstein maintained an outperform rating on Bajaj Auto with a target price of about 11,000 rupees per share. Yet, if you look at Bajaj Auto, despite the challenges they are expected to see in the second quarter, the management expects that the things could normalize by the second half of FY26.
Yes, and I think, I saw Rajiv Bajaj on CNBC TV 18, and in that interview he said that rare earth magnets are a supply chain issue, but it will get resolved soon, and probably we could see some short-term blip in production. And when it comes to domestic demand, the management is hopeful that the festive season would get in additional volumes. Also, if you talk about the two-wheeler space per se, both Hero MotoCorp, Bajaj Auto Post, the numbers have been trading in the green despite whatever the markets are doing. I think market probably believes that in the second half, actually we could see two-wheeler stocks do better in the entire auto pack.
That's right, that's right. Let's now shift focus to the top Nifty losers. That was your Trent. Now that stock sulked in trade today, but the company reported a beat on all parameters for the June quarter performance. If you look at bottom line, that grew in double digits, but revenue was up about 19% on a Y-on-Y basis. Even margins expanded from a Y-on-Y basis despite street estimating a contraction. Now, despite a beat across all metrics, now what sulked the sentiment is that the stock is already quite high compared to the growth it has been delivering. That's what the concern on the street has been. If you look at Trent's historical 5-year CAGR growth, that has been about 35%, but the management in its analyst meeting stated that they will be seeing about 25% revenue CAGR growth going ahead itself. So that itself represents a 10% cut in its growth runway. Even brokerages, they became quite conservative on the counter. If you look at Jefferies, they gave a hold call. They said that the revenue has decelerated to a multi-quarter low of 20%. And if you look at another brokerage, that is your Morgan Stanley, they also flagged the point that Trent's recent growth trends do not justify its current valuations at this point of time, and this is what could limit the stock's upside momentum. Yet then if you look at the same concern has prevailed, where the stock has been commanding a premium compared to its growth that it has delivered, and this quarter also the same concern has been on the street.
Yes, there are concerns with regards to growth slowing down, but I think Trent's management in its commentary mentioned that the operating performance will continue. So markets are not worried on the margin front, but yes, on the sales front, 20% growth on the revenues was a multi-year low growth figure. Probably that was a small concern from the street, but when it comes to the festive season or the upcoming quarterly numbers, management is confident that things will work out when it comes to the growth acceleration.
Now that we spoke about these two stocks, let's also shift focus to PVR Inox, because that stock did well in this subdued market sentiment today. 3% uptick coming in for the counter, where the company's quarterly loss narrowed in the June quarter because of the strong box office collections that the company saw because of the release of F1 movie. If you look at revenues, that also did well, double-digit growth coming in for the June quarter. Average ticket prices rose about 8%, while per head spending on food and beverages also increased by 10% itself. How the brokerages have reacted? CLSA gave out an outperform call on the counter. They gave a target price of about 1920 rupees per share. They highlighted that the management has highlighted the month of July itself has also been quite strong because they've seen an 18-month high in admissions. Even Motilal Oswal gave out a neutral rating on the counter, seeing a recovery in the Hollywood collections, and they believe that there is a promising content which would bode the stock well ahead as well. They also believe that initiatives such as Blockbuster Tuesdays that the company has undertaken, curated re-releases, live sports screening and weekday value meal offers, they are expected to drive uplift in footfalls and spends per head, aiding the weekday monetization. Yet now brokerages are quite mixed on the counter, but the management is quite positive for the second quarter itself that the footfalls would be better than FY24. But it still depends on whether this consumer taste and whether people have actually flocked back to traditional cinema and whether the play out of this merger synergies could be visible on the counter.
Absolutely, post-COVID, Lovisha, there is no clear trend if patrons are returning back to, cinema and theatres. Because the OTT platforms as well as the smartphones are equally giving competitions. Q1 was a good quarter primarily because there were new good releases. The Hollywood and Bollywood both delivered good feature films which was liked by the audience. There were good collections in multi-starrer films, and probably Q1 was good. We don't know whether or not in the coming quarters we could see some good releases, some high starrer films. But yes, as you mentioned, there is no clear trend as to what does the consumer behave like when it comes to cinema and consuming films in the theatre, something which PVR Inox has done for years post the COVID. I think a lot of things have changed for these exhibition centres.
That's right. That's right. Let's also talk about BHEL because that also stock, did well in today's trading session. Off to you, Yatin.
So, BHEL was one of the top losing counters in trade today, Lovisha, because the quarter one numbers were a washout. If you look at the quarter one numbers, the losses doubled on a year-on-year basis to be over 550 crores. And if you talk about the overall margin performance, it was in the negative trajectory. In fact, the company posted operating losses for the quarter. It was operating profit last quarter, and last year it was a minor loss. So, clearly Q1 has been quite weak for BHEL. In fact, CLSA has an underperform rating and their target is below 200 rupees per share. And CLSA believes that the kind of results Q1 has seen, probably investors could be skeptical. The only savior this time is the thermal power order book, wherein the company has been able to get new orders with respect to the thermal power plant construction. So, probably that could be a savior in the coming quarters, but clearly Q1 results have disappointed, brokerages are also negative, and probably this is the reason why the stock closed almost at the day's low. No recovery seen in the counter intraday, was down 6% the whole day and ended the day lower by nearly 5%, closing close to 228 rupees per piece.
That's right. 5% downtick for BHEL itself, extending the monthly decline to about 11% or so. But yes, that's all the stocks we have for today. We will watch out for any comments, if any, hoping not from the White House. And like usual, earnings reaction will continue. Tomorrow we have some big PSU lender SBI reporting the results, so all eyes on that. Rest, we will come back with markets tomorrow. It's a wrap from Yatin and me, and thank you for watching.